Good afternoon, everyone. I'm Sai Nair on behalf of Kirin Advisors. It's a pleasure to welcome you all to Beyond the Numbers Value Discovery Summit 2025, powered by Value Educator and co-powered by Kirin Advisors. This is the fifth interaction of the day one, and we are pleased to host Anya Polytech and Fertilizers Limited. So, from the management team, we have Mr. Yashpal Singh Yadav, the chairman and managing director, Mr. Anurag Srivastav, Senior Advisor, Strategy and Projects. From Value Executive team, we have Mr. Pranit Jakadi. So with that, now I would like to hand over the floor to Pranit, sir. Over to you, sir.
Thank you, sir. A quick introduction before we begin. Anya Polytech and Fertilizers is a diversified manufacturing company operating across two key verticals, industrial packaging and fertilizers. On the packaging side, they produce HDPE and PP bags used widely for fertilizers, food grains, sugar, urea, and cement, with a focus on durable, moisture-resistant bulk packaging. In fertilizers, the company manufactures zinc sulfate, both mono and high heptahydrate, micronutrient blends, SSP, and other agri inputs such as certified seeds and cattle feed, along with trading of select industrial chemicals. With this, I conclude the company overview and I hand over the stage to Mr. Yashpal Singh Yadav, the Chairman and Managing Director. Over to you, sir.
Good afternoon, everyone, and I would like to thank everyone for being with us today. So, can you start the presentation? I'll give a brief. So, I'll give a brief description about the company. So, company was formed in 2011, um, and the company specializes in manufacturing of HDP, PP bags, woven bags, BOPP bags, and jumbo bags. Then another vertical of company which was started in 2016 was micronutrient fertilizer, and company started micronutrient manufacturing in 2017, which includes zinc sulfate, uh, heptahydrate, monohydrate, ferrous sulfate, uh, magnesium sulfate, copper sulfate, micronutrient mixtures, and other micronutrients. The company is in production of wide range of agricultural products also, including single superphosphate, organic potash, chelated zinc, prom, etc. We are also into the manufacturing of biofertilizers and cattle feed and certified seed through our different companies. Company is ISO certified, and we have all the BIS license required for our product. And company has four subsidiaries, 100% owned subsidiaries. One is Aravali Phosphate Limited. The factory is located in Udaipur, Rajasthan, in which we manufacture single superphosphate. And Aravali Phosphate is 100% owned by Anya Polytech and Fertilizer. Anya Agro and Fertilizers Private Limited. Anya Agro and Fertilizers deals in seed marketing. Company is into contract farming. Company hires farmer for production of seeds. Then we process our seed and then we sell our seeds in northern part of India. So this company is dedicated for seed marketing only, seed marketing and production. Then we have Yara Green Energy Private Limited. It's a new venture started last year. This venture deals in green energy and energy through agri waste. So we have a solar plant of around 700 kilowatt. Another 700 kilowatt facility is coming up, and a company is coming up with biomass pellet unit, which will be started by first half of 2026. Then fourth subsidiary is Polyform Packaging Private Limited. Polyform Packaging Private Limited was acquired last year. It also manufactures similar product like HDP, PP bags, BOPP bags, and it is located in Bhopal. Manufacturing facility is located in Bhopal under Startup India scheme. So we have different benefits in this company, and geographically it is at the central part of India, so it is easy to divert our southern part and other ports order to through this company. Next. So this is our strength. Like we have 14 year of experience, 200 plus team size, more than 10 product categories, presence in 17 states. Now it's 19, not 17. And we have, company has approximately around 50 acre of industrial land, more than 50 plus types of machinery. PP bag capacity is 440 lakh bags per annum. HDP bag is 350 lakhs bag per annum. Zinc sulfate capacity 16,500 metric ton per annum, which is one of the biggest facility in India. Single superphosphate unit capacity is 66,000 metric ton. And company has income of 138 crores, EBITDA is 23 crores, 60 lakhs, and profit last year was PAT was 8 crore 19 lakhs. These are milestones and journey of excellence in 20, as I told, the company was formed in 2011. Then in 14 we decided that company will also enter into fertilizer. So the name fertilizer was added 2017. After when we started our micronutrient fertilizer unit, we got award from Ministry of Fertilizer by fertilizer minister for promotion and best manufacturing premises of micronutrient. Then 2021, we got award for most influential leader. 2022, these are all awards. Then 2023, we signed MOU with Crypco for supply of zinc sulfate and SSP for 5 years. Uh, Achieved 100 crores revenue, converted it to limited company, and in 2024 the capital reduction was done for IPO because our share capital was beyond a certain level and shares were subdivided. We got award in UK, which is Mahatma Vikas Puruskar in 2023-2024. In 2025, company got listed and we received 440 times over subscription in our IPO. We collaborated in 2025. We collaborated with UPL for for marketing and technology sharing for various products. We collaborated with Coromandel also for supply of fertilizer bags and micronutrient fertilizer. So, board of director includes me, Yashpal Singh Yadav. I'm managing director as well. The board member is Mr. Tejpal Singh, Lisa Sani, and Minik Bhatia. Next. This is our list of our clients. So, around 70% of our business, 65 to 70% of our business is B2B. And in B2B, we deal with IFCO, JP, Yara, Pripco, UPL, KSFL, Deepak Fertilizers, JP, IPL, Coromandel, Aditya Birla Group, Sugar Federations, UP Sugar Federation, Wave Industries, etc. So this is our product range: HDPE bags, PP bags, Leno bags, BOPP bags, fabric roll. Few other products are there like jumbo bags and jumbo bags and fabric roll is there. So, and in fertilizer, agri inputs, we manufacture micronutrient fertilizer, fertilizer mixture, zinc EDTA. Zinc EDTA is our USP because we are the only manufacturer of zinc EDTA in India. All other companies are importing from China. Cattle feed is also in our product basket. Then we have certified seed, as I mentioned. The business is done through Anya Agro. Then this is new product mycorrhiza biofertilizer. It is developed with UPL. So patent and technology was given by UPL, and we are manufacturing this product in Shahjahanpur only under our brand name. So these are application of our products like HDP is by default it is used for sugar and fertilizer packaging as per Indian government guidelines. PP bags are used for fertilizers, imported fertilizers basically, food grain, seeds, cement, etc. Lino bag is used for vegetable packaging, potato, onion, garlic, all these packaging. BOPP bags are basically used for food grains like rice or some rice, pulses, all these agri products, food grains are packed in BOPP bags. Some seeds and fertilizers, which are like uh, uh, very expensive fertilizers, they are also packed in BOPP bags. Fabric rolls are basically our new vertical, which now we are focusing more on fabric rolls, and the fabric rolls are manufactured for exporters. So we export these rolls to US and Gulf countries. Next. Similarly, these are our fertilizers which are used in plants growth. So zinc, sulfate, monohydrate, all micronutrients. Like we take micronutrient tablets to overcome the deficiencies of micronutrient in our body. Similarly, these micronutrients are provided to plants so that they are the crop which is coming is nutrient enriched. So zinc, Indian soil has maximum zinc shortage. So we manufacture zinc sulfate, ferrous sulfate. All these products are treated as micronutrient. Then biofertilizers are there, which are which boosts photosynthesis, balance nutrition, growth, etc. Next, these are all our products. Anya Phospho, King, Superdhan. This is single superphosphate. This it is used for phosphatic deficiency. Phospho King is for phosphorus deficiency. So our product basket caters all micronutrients and phosphatic fertilizer as a nutrient, which comes under macronutrient. These are also a mycorrhiza, as I said, it's our new product, and it is used for the absorption of nutrients and to make roots stronger. So it's a very good product and very good technology. So this is the usage of micronutrient salts. Like zinc is vital trace element crucial for the healthy growth and reproduction of plants, animal, and humans. It is one of the essential micronutrient needed for optimal plant development. Zinc activates key enzymes involved in growth process, includes protein synthesis and auxin production. The deficiency in zinc can lead to reduced crop yield, poor quality produce, and severe cases crop failure. So it is a very vital nutrient, and Indian soil is highly deficient in zinc. So that's why this nutrient is used. These are the bifurcation of our uh, packaging unit and fertilizer unit sales. So in 2025, it's okay. It's okay. Can next. So this is the revenue which comes from different states. So Uttar Pradesh and Maharashtra, they contribute maximum revenue. UP is more because our packaging material is maximum. It is going in this state. That's why the percentage of Uttar Pradesh is higher. But for fertilizer, UP and Maharashtra is equivalent. Then Gujarat, Rajasthan, Madhya Pradesh, another state. So these are our different units. Ravli phosphate is in Udaipur. This is our Shahjahanpur unit. Polyfoam packaging is in Bhopal, Madhya Pradesh. Next. This is our capacity utilization, installed capacity and capacity utilized. So PPE production came in 2024. So we are increasing our capacity utilization, and by this year end, we will touch 80 to 90% capacity utilization in PPI. Next. Similarly, in fertilizers, we are continuously increasing, and our micronutrient unit is one of the biggest production facility in India, which produces 16,500 metric ton of micronutrient. SSP, we acquired this unit in 2022. It was a sick unit, so we are continuously increasing the production. Subsidiary acquisition, Polyform Packaging, as I informed, that Polyform Packaging was acquired in 2025 and under various benefits which Anya can avail, uh, and including subsidized energy cost, income tax exemption, location advantage, and other benefits of Startup India. Anya path to sustainable growth, leveraging competitive strength. So we have experienced management, best technology, and we are developing continuously. We are developing new lines, production lines, and our marketing team quality and standards are high because we are dealing with one of the biggest player of the industry in B2B, customer-centric focus, circular economy solution, and geographical expansions, which we are continuously doing. This is our CSR activity. So company runs girls' school. We in Uttar Pradesh, we did so a lot of activities for farmers, and we are doing promotional activity for farmers, and educational programs are run by us, and different sports activities in rural India, uh, because our major customer belongs from farming community. So we do time to time we keep on doing activities for them. Indian plastic packaging market, industry outlook, and its long-term growth. So, Indian plastic packaging market sized approximately 22.4 billion in 2025. The market is expected to reach 26.13 billion by 2030, growing at CAGR of 3.26 during forecast period of 2023-28. The demand for rigid plastics in food packaging is driven by a preference for convenience, portability, and tensile strength, which are also crucial in cosmetic and toiletry industries. Accounting for over 60% of market, flexible packaging is essential for food, Indian growing food market, and expanding food processing sector. E-commerce market is driven by economic growth, increased in internet use, and changing lifestyle, which fuels demand for packaging. DRDO and partner have developed eco-friendly packaging from natural material, offering sustainable alternatives to single-use plastic. But HDP and BP is 100% recyclable, and companies also recycling its wastage and other products. India aims to ban single-use plastic by 2022 with awareness campaign like Plastic Action and 2021 supporting this global. The diversity of applications and advantage offered by plastic are adding to the demand of plastic packaging in Indian market, driven by consumer needs for convenient on-the-go products. Emerging trend and innovation in Indian plastic market. So one of the biggest emerging trend is recycling, and Anya is also recycling. We can say we are recycling our 100% wastage. Uh, Indian e-commerce industry valued at around 125 billion in 2024 is projected to grow 345 billion by FY30, reflecting compound annual CAGR of 15%. Annual per person packaging use in India has surged up to 200% over the last decade. An agreement for polyethylene film solution from post-consumer recycled plastic was signed in February 2021 to enhance circularity. The number of online shoppers in India grew from 260 million in 2024 to 700 million in 2035, boosting demand for recycled plastics. In December 2022, India introduced the Plastic Pact to ensure 100% plastic packaging is reusable for recyclable by 2030. India's mandate for barcodes and QR codes, all plastic carry bags, and multi-layered plastic from July 2025 has been hailed as a bold step towards the sustainable waste management. Next. And this is fertilizer industry landscape. Agriculture is crucial to India's economy, with the sector growing at an average rate of 4.60 annually. But over past 6 years, India is second largest consumer and third largest producer of finished fertilizer through it relies heavily on import for both finished product and raw material. So the industry is growing continuously, the demand is growing continuously, and government is trying to import, government is trying to reduce the import by uh, promoting Indian companies to produce more. So in India, approximately 87% of urea and 40% of DOP and 90% of NPK fertilizer are produced domestically by PSUs and private companies. The remaining amount is imported. Urea by the government of India and PNK fertilizer by companies under general license to meet the demand supply here. The sector-wise production of urea, DAP, complex fertilizer is detailed in the table. The nutrient-based subsidy scheme is there, and government is providing a lot of benefits to farmer. So our SSP comes under nutrient-based scheme, and government provides subsidy on the product. The key financial highlight and total income is increasing by 9.25% from 2023 to 2025 by 2025. Last year we did turnover of 138 crores approximately. Margins are also increasing. Yeah, these are our revenue from operations. So in 23 the turnover was 115 crores, 115.55. Then in 24 it is to 123.41 crores. Then in 25 FY25 136. And in this half year of 2026, we did turnover of 98 crores. So this year we are expecting around 200 crores turnover by end. Other incomes are mentioned. These are our, this is our consolidated balance sheet, and the numbers are given. Next. These are key ratios of the company, and book value per share has been given. And so this is SWOT analysis, challenges and opportunities for the company. So our strength is diverse service portfolio, experience management, growing demand. Weakness is like high raw material cost. Raw material cost is increasing. Dependency on economic condition. Capital intensive business. Opportunities are there. The government incentives, partnerships and collaboration, sustainable trends. And government is promoting fertilizer industry a lot to reduce the import. And parallelly, flexi packaging industry is uh, best alternative for food grains, and government in future government will replace jute bags to uh, yeah, HDP PP bags, which is another very big market for us. Threat is intense competition, supply chain disruption. So investment rationales are given, data. These are financial numbers. So this is it. Now we are open for question and answer. If anybody wants to ask anything, please let us know.
Yeah. So participants, the floor is now open for Q&A session. If you have any questions, kindly raise your hand. I'll allow you to unmute and you can ask the questions. You can also write down your questions in the chat box. Mr. Murlidhar Boja, you can go ahead and ask your question.
Yeah, hi. Thank you, everyone, and thank you, Ishpalji, for beautiful presentation. Very detailed. Thanks for that. So the question is now actually, for a just market capital of, about like, how much, 250 crores, and you are, diversified into packaging, fertilizer, and renewable energy. So this is my first question, but is it not too much for this size? Diversifying so much, you will lose the focus, right? So how are you handling that?
No, we initially we started with woven bag, and we are one of the biggest supplier to fertilizer industry. So fertilizer then micronutrient mixture was integration to our product line. So those companies which are buying bags from us, they are buying micronutrient from us.
Yeah,
And
but HDB, the packaging, I think HDB bags packaging is okay. That could be a smaller one. But
mm,
fertilizers means like we need to be, competing with top players in the market, like, who are having even 1 lakh market capital. So how can we,
no.
compete with
In
them?
our see, it's a different sector. So when we are talking about macronutrient player,
Mhm.
macronutrient players are only PSUs in big cooperatives. They are our, I mean, B2B customers. So we are into micronutrient. So in micronutrient, when we started this industry, there are only three or four player which manufacture this kind of those who have this kind of production facility, and maximum material is going to B2B only, because all those macronutrient player, they are marketing our product. So there is no direct competition with them, because for them this industry is small, so we are doing this job for them, like
Okay.
bag manufacturing. So we are doing job work for those companies only.
Okay. You mean to
Can
say
I
actually?
add?
We are supplying fertilizer bags to IFCO, and then we are supplying zinc and other micronutrient to IFCO, because they don't produce this material. They produce only urea and DAP, and for other material they buy from companies like us.
Okay, so this micronutrient one, like in this industry, are we the largest player, or you can say our
So
market
far,
size is the maximum?
manufacturing wise, we are largest, and this year we will be number one in sales number also.
Anurag sir, you have something to add?
I wanted to add something. Sir,
Sure.
please understand, we are very strategically placing everything to of ours. You know, when we started this unit 12, 13 years back, we went to Shahjahanpur, which is, almost 350 kilometers from Delhi, where Mr. MD lives today, or that time also. But why we did it? Because we were knowing that the majority of the fertilizer companies and majority of the sugar belt is there only. So we wanted to be near our customer. Similarly, when we come to fertilizer business also, we know what is not available in the market, and that is only the place where we want to step in. We will never be, we understand your concern that we will never be able to, or we are not interested in being in competition with a well-established player.
So what is the
So
market
everything is
size
being
of
done
the micronutrients,
strategically.
and
So,
what is our capture
as
percentage?
per FAI data last year, the micronutrient sales pan India was somewhere around 250 thousand, like uh, 2.5 lakh tons, which
And
include
what is our market capture size?
our production facility is 16,500. So we are less than 10% so far.
Okay, so market
So
leaders are someone else. There are many.
that's what I want to say. So around 60-70,000 share belongs to organized sector. Those who are like having big manufacturing facilities. Rest other market belongs to unorganized sector. Those who doesn't ma those who manufacture small quantities like 2,000 ton, 1,000 tons, like that in different region.
Okay, then what is the
See,
strategy
when
for
we started
getting
this,
into the
Pardon?
renewable energy also?
So renewable energy, initially we started for our own consumption because we are taking energy, and we decided to reduce our energy by using green energy,
Oh, so okay. So just self-dependent. It's like it's not
self-dependent.
for selling,
Now,
right?
no, no,
now our
we
because
started
we
as
are
a,
supplying our materials to sugar mills and other companies, so we are getting raw materials for biomass from those companies only. So, and customer also, our customers are also nearby our factory premises only, like Reliance Industry and PepsiCo. They are near Shahjahanpur only, and we already got the LOI, and they are our target customer only. Again, B2B.
Okay. I just end with my final question. That's about in your SWOT analysis page, you mentioned the two things as the threats, right?
Yeah,
One is the competition, the second is the supply chain.
supply chain.
So how are you going to address when they come up? Because
So,
like
sir,
you just not
to
did not mention that how are you going to
yeah.
handle them?
So, for to maintain supply chain, companies expanding in different locations. So, this Bhopal unit, Polyform we acquired, so that we can supply our port orders from Bhopal. So, Hajira, Surat, it's easy to cater from Bhopal. Similarly, for our micronutrient, as I mentioned, that we have two major states are there, UP and Maharashtra. So Uttar Pradesh, we are already located. Now we are expanding in Maharashtra next year. So we have already bought land in Nasik, and we are putting a small unit that will that will be dedicated to Maharashtra only, and that will manufacture other products which as I mentioned, the technology is given by UPL. So those products will also will be manufactured in Nasik only. So we by that way from that factory we will cover south, and from this factory we will cover all northern states. So we are trying to expand ourselves strategically so that we can address the issue of supply chain.
Great. Thank you. Thank you very much. Yeah.
Yeah. Once again, participants, if you have any questions, kindly raise your hand. I'll allow you to unmute and you can ask the questions. You can also write down your questions in the chat box. So we have some questions here in the chat box. We'll address that. So someone's asking, as you prepare for the next phase of growth, which aspect of the business do you feel needs the most attention today?
So definitely, our new ventures need more attention. But I am personally, I feel that fertilizer business and green energy business will do much better. What we think.
Okay. The next question we have is between the packaging and fertilizer segments, where is management more comfortable deploying incremental capital today and why?
So it depends on situations. Till last year, packaging business was very stable. I mean, our customers were all these companies, and then suddenly the new development has happened, and you must be knowing about US-China tariff thing, and there is a tariff on China by US. So it opened the door for Indian companies, and now the packaging material is supplied. Maximum material is going to US in the form of rolls. So it's a new product line. So now there is a huge demand, and capital is required in this sector. But currently, we are planning to expand more in green energy and fertilizer business. But we will try to expand our capacity in packaging also. Looking at the scenario, that if it continues, then we will definitely do capex in packaging also.
Okay, thank you for answering that, sir. The next question we have is as the business expands across multiple verticals, which financial metric does management track most closely to ensure growth remains disciplined?
In all our verticals like packaging, fertilizer, green energy, the growth is there, and almost continuous growth of 10 20% is there in every sector.
Okay, so someone's asking you, you mentioned fertilizers being a more attractive growth engine. How the next over the next phase is the focus more on scaling volumes or on expanding the share of specialty and shielded products?
So for this, we have we initially company was doing B2B business only. But from last 2 3 years, we have our own field force, and that's why I was saying that now it is 70/30. So 30% material we are marketing directly to farmers. Company has opened its own retails also. Like till last year, there were only 5 retail stores. Now we have 7 to 8 retail stores, and we have a target of 70 retail stores across India. So we will liquidate material through our own channel also, dealers and distributor. We have licenses in 18 states, and we are aggressively building our team for marketing. And all our products are niche product, very high end quality, and there is no replacement of these products. So we would like to touch the customer directly, apart from B2B business.
Okay, thank you for answering that, sir. The next question we have is you have guided to 17 to 19% EBITDA margins in H2 with fertilizers structurally higher margin than packaging. As you scale further, is margin improvement expected to come more from product mix changes or from operating efficiencies within each segment?
No, no, no. It keeps on changing. Now, this year, you will see better EBITDA margin in packaging also because of this new vertical which is opened. Like export market is open for India. So even packaging will also increase. And fertilizer margins are definitely they are very attractive this year, and they will be attractive from for next few years because the demand is increasing heavily. So this year we will see EBITDA margin growth in EBITDA margin both the products. So
Okay, thank you for answering that, sir. Once again, participants, if you have any questions, kindly raise your hand. I'll allow you to unmute and you can ask the questions. You can also write down your questions in the chat box. Yes, Mr. Apar, you can go ahead and ask your questions.
Hi, good afternoon. Firstly,
Good afternoon.
thanks for giving this opportunity. Sir, I want to understand more on this green energy kind of business. So we are more focused towards pellets and biomass, this kind of product.
Yeah, I mean, we are starting with this thing because where we are located, we have lot of rice husk and uh, rice waste is available.
Got it, got it.
So
So,
that is like, and the government has made it mandatory that those companies
yeah.
who are using coal
Like
have
NTPC and
to.
all, they have to
So we have a
cater to
power
these.
plant nearby, Reliance Energy, and other power, two more power plants are there. So we decided to, I mean, because farmer is our ultimate customer. So
Yeah.
for fertilizer also, and for packaging also, we are what packaging we are making, fertilizer is packed and going to farmer only. So it was an initiative initially to do something for farming community so that they shouldn't burn this rice husk and all. And
Sir, I got it
the
totally.
government is
I got
also
it.
supporting. And when we saw the numbers, they are very attractive in biomass packaging. So we thought of doing it through green energy company.
Sir, in this green energy itself, there is one more company called as Shubh Biofuels. It is
Mhm.
also SME company. So it also makes this biomass and pellets and all. As per I have also attended.
Shubhshri is basically a retail or aggregator company. I'm aware of Mr. Dattani is heading it,
Yeah,
so
right.
we are aware of, but we are not competitor to them. We will be using it as a manufacturer. They are more of aggregator.
So by manufacturing, what does it mean, sir? Like
We
how
will be
we will be.
producing our own product and then subsequently selling it to the market.
So, Apar, let me explain you. So, there are two type in biomass pellet. There are few companies which buy pellets from different small companies and they supply it to power plants and other. So they are called aggregator because they are arranging material, sourcing material for these companies. We are manufacturer and we have direct supplying agreement to these power plants and PepsiCo and all these companies, those who doesn't want to burn coal. So
Hmm.
this is the basic difference.
Okay, got it, sir. This was it, sir. All the
So
best.
we can hire an aggregator also to
Hmm.
market our product if
To
we
source.
don't have direct business.
Got it, sir. Thank you.
Thank you.
Okay, once again, participants, if you have any questions, kindly raise your hand. I'll allow you to unmute and you can ask the questions. You can also write down your questions in the chat box. Sir, I think we have covered most of the questions here. So, huh. So can we conclude the meeting?
If nobody is there to ask questions, we will be happy to answer any questions. But if it is that the case, we will be we are thankful to everybody who joined us.
Yeah. So thank you, Anurag sir. Thank you, Yashpal sir,
Thank you.
and all the participants who took their time to attend this meeting. Further, if you have any more queries, feel free to reach out to us at corporateaccess at the rate research at research at the rate kirinadvisors.com. Thank you.
Thank you.